Hey everybody, Blake Carbonado here from Rush Capital, kicking off a little video series about investing in our development deals. These are the deals that we build, manage, and own for the long term. It's a really cool privilege that we get to invest in our deals. What an awesome opportunity to supplement our 401k retirement savings with real estate investments that produce cash flow and appreciate over time. To help illustrate how these investment opportunities work, I'm going to show you a little video clip of our recent apartment project in Shoreline called Paceline. It will use the example of had you invested $5,000 and what those returns would look like. If you have any questions about investing, you want to learn more, shoot me an email, give me a call. Happy to chat about it. Cheers. For every Rush investment opportunity, the process begins with Rush Development and Capital pursuing land, doing extensive research on those sites, and determining if the opportunity is worth us pursuing. After we have done extensive research on the site and determined that it is worth pursuing through our feasibility studies, we begin the entitlement and design process. Once the project is about to begin construction, Rush Capital will raise equity from our outside investors and our internal team members. Those who contribute funds toward the project become an investor in the LLC, which owns the real estate. Once Rush Capital has raised all of the equity and closed the construction loan, Rush Development will finish the design and permit process and hand off the project to Rush Commercial Construction to begin construction. While construction is underway, we are working behind the scenes to make sure our project is ready to hit the market at construction completion. Edison 47 would be working on marketing and pre-leasing efforts for an apartment project, or Rush Properties if it was a commercial project. Once construction is completed and we get certificate of occupancy, Rush Commercial hands it off to our management companies and begins the leasing process to help move tenants into the building. For the investors, this stage is huge because the building is now collecting rents and income is coming in. When the project stabilizes, which means we now have a full building with paying tenants, we look to pay off our construction loan with a long-term permanent loan. We work with our relationships on the lending side to get the best rates possible and often are able to return a portion of our investors' initial investment back to them. This is called a return of capital and is not a taxable event and does not reduce your ownership percentage. This return of capital is huge to investors because it allows you to get some of your money back tax-free while maintaining your ownership in the building. With that ownership, you then are entitled to your ongoing quarterly distributions from operating profits. When the building is stabilized, we are now producing excess cash flow, which means the income is greater than the expenses to operate the building, and we have money available to distribute on a quarterly basis. You would be entitled to your share of those profits on a quarterly basis and paid with a check every quarter. Although we plan to own our development projects for the long haul, we have to assume we sell the building at some point in the future to estimate our returns to investors. In most of our projects, we will assume a sale in 10 years, which would then provide all of the profits from that sale to investors at that point in time. That's what you would see in all of our spreadsheets. Now that you understand the phases of a Rush development project, take a peek at a sample scenario of what it could mean for you as an investment. This is based off of our Paceline project in Shoreline, and had you invested $5,000. What this suggests is that if you invested $5,000 in Shoreline, 3 years later you'd get almost $4,000 back, plus another $600 a year for 10 years, and at the end of 13 years you'd get another $10,000 when we sell the building, for a total of almost $20,000 over 13 years for a $5,000 investment. Not bad. Now, if a team member decided to invest $5,000 a year for 10 years at the company, they would invest $50,000. But if we can refinance and pull equity out, that person may get another $25,000 back over that 10-year period and now have $75,000 invested, which could generate $7,000 a year in income. Now imagine if you invested $10,000 a year for 20 years, or $15,000 a year for 30 years. This would be a wonderful contribution towards your retirement and make you an owner in Rush Company projects as well. Now think of investing in our projects as a retirement plan supplement to our 401k we offer. The more you invest over time, the more potential you have to make money and produce long-term cash flow from the real estate. We are grateful for every one of the Rush Company team members and ready to share the wealth as we build an exceptional future together. And we hope that this helps all of us better understand investing in real estate and setting us all up for success in retirement.